Have you ever needed money urgently but didn't want to sell your gold jewelry? What if your gold could help you get instant cash while still remaining yours? Millions of people around the world use gold loans every year to pay medical bills, fund education, expand businesses, or handle financial emergencies. But here's the question: is taking a gold loan really a smart financial decision? Or is it a hidden financial trap that could make you lose your precious jewelry? In today's video, we'll explain everything you need to know about gold loans, from how they work and their benefits to the risks, eligibility, interest rates, repayment options, and expert tips to help you borrow wisely. So stay with us until the end, because one simple mistake could cost you your valuable gold. What is a gold loan? Let's begin with the basics. A gold loan is a secured loan where you pledge your gold ornaments or jewelry as collateral to a bank or financial institution. Instead of selling your gold, you temporarily deposit it with the lender. In return, the lender gives you a loan based on the current market value of your gold. Once you repay the loan along with the interest, your gold is safely returned to you. Think of it like using your gold as a temporary financial backup. Simple example. Imagine you own gold jewelry worth Rs 500,000. Depending on the lender's loan-to-value ratio, you may receive around Rs 375,000. You can use that money immediately for any personal or business need. After repaying the loan, your jewelry comes back to you. Simple, fast, and convenient. Why are gold loans so popular? Gold loans have become increasingly popular because they are among the fastest ways to borrow money. Unlike many traditional loans, approval is usually much quicker. Since your gold acts as security, lenders face lower risk. This means faster approval, less paperwork, easier eligibility, quick disbursal. In many cases, borrowers receive money within a few hours. How does a gold loan work? Let's understand the complete process step by step. Step 1. Visit a bank or licensed gold loan company. Step 2. Your gold is checked for purity and weight. Most lenders accept gold between 18 and 24 carats. Step 3. The lender calculates the value based on current gold prices. Step 4. The eligible loan amount is determined. Usually, lenders finance only a percentage of the gold's value. Step 5. You submit basic identity and address proof. Step 6. The loan is approved. Your gold is stored securely in a protected vault. Step 7. You receive the loan amount directly into your bank account or through another approved payment method. Who can apply? Eligibility is generally simple. You usually need minimum age requirement, valid government-issued identity proof, address proof, gold jewelry accepted by the lender. Most lenders do not require a high credit score because the loan is secured by your gold. However, lender policies may vary. What can you use a gold loan for? One major advantage is flexibility. Borrowers often use gold loans for medical emergencies, education expenses, business expansion, working capital, home renovation, wedding expenses, agricultural needs, unexpected financial emergencies. Since it's a secured loan, lenders usually don't ask for detailed explanations about how you'll use the funds. Major benefits of gold loans. Now let's discuss why many people prefer gold loans. Benefit number 1. Fast approval. Gold loans are among the quickest types of loans available. Some lenders approve and disburse funds on the same day. When time matters, this speed can be extremely valuable. Benefit number 2. Minimal documentation. Compared to personal loans, documentation is usually much simpler. Basic identity and address verification are often sufficient. Benefit number 3. Lower interest rates. Because your gold secures the loan, interest rates are often lower than unsecured personal loans. This can reduce your borrowing cost significantly. Benefit number 4. No need to sell gold. Your jewelry remains yours. You're simply pledging it temporarily. Once the loan is cleared, you receive it back. Benefit number 5. Easier approval. Even people with limited credit history may qualify because the lender's primary security is the pledged gold. Benefit number 6. Flexible repayment. Many lenders offer different repayment options. For example, monthly EMIs, interest-only payments with principal at maturity, bullet repayment, Flexible repayment structures help borrowers manage cash flow. What are the risks? Now comes the most important part. Gold loans are useful, but they also carry risks. Let's understand them carefully. Risk number 1, losing your gold. If you fail to repay the loan according to the agreement, the lender may auction your pledged gold to recover the outstanding amount. This is the biggest risk. Always borrow only what you can comfortably repay. Risk number 2, interest can increase your cost. Although rates are generally lower than personal loans, interest still adds up. Long repayment periods can make the loan more expensive. Risk number 3, processing and other charges. Some lenders may charge processing fees, valuation charges, late payment penalties, documentation fees. Always read the complete fee structure before signing. Risk number 4, gold price fluctuations. Gold prices change regularly. Depending on lender policies and market conditions, significant price movements may affect future borrowing capacity or related terms. Risk number 5, borrowing more than necessary. Many people borrow the maximum amount simply because it's available. This increases interest costs and repayment pressure. Borrow only what you genuinely need. How is the loan amount decided? The amount depends on several factors. Gold purity, weight, current market price, loan-to-value ratio, lender policies. Higher purity generally means higher value. How is interest calculated? Interest depends on factors like loan amount, loan tenure, repayment method, lender's interest rate. Always ask for the complete repayment schedule before accepting the loan. Knowing the total repayment amount helps avoid surprises later. Gold loan versus personal loan, let's compare them. Gold loan secured. Faster approval, usually lower interest, requires gold collateral. Personal loan, usually unsecured, may require stronger credit history. Often takes longer for approval, usually higher interest. No collateral required. If you already own gold and need quick funding, a gold loan can often be a practical option. When should you consider a gold loan? A gold loan may make sense if you need money urgently. You have temporary cash flow problems. You expect to repay the loan within a reasonable period. You don't want to sell your family jewelry. When should you avoid it? Avoid taking a gold loan if you're unsure about repayment. You already have excessive debt. You plan to borrow for unnecessary luxury spending. Your income is unstable. Expert tips before taking a gold loan. Here are some smart borrowing tips. Compare multiple lenders. Check interest rates carefully. Understand every fee. Read the loan agreement completely. Never borrow more than necessary. Choose a repayment plan that matches your income. Keep repayment reminders to avoid penalties. Maintain copies of all loan documents. Ask how your gold will be stored and insured. Common myths about gold loans. Myth 1. I lose ownership of my gold. False. You remain the owner as long as you repay the loan. Myth 2. Only wealthy people take gold loans. Not true. People from all income groups use gold loans during emergencies. Myth 3. Gold loans damage your credit automatically. Incorrect. Timely repayment can support a healthy credit profile, while missed payments may have the opposite effect, depending on reporting practices and lender policies. A gold loan can be one of the fastest and most convenient ways to access funds without selling your valuable jewelry. It offers quick approval, relatively lower interest rates compared to many unsecured loans, and flexible repayment options. However, it also comes with responsibilities. Late payments, hidden charges, or borrowing beyond your capacity can create financial stress and even put your pledged gold at risk. The smartest approach is simple. Borrow only when necessary. Understand every term. Compare lenders. And always have a clear repayment plan before taking the loan. When used wisely, a gold loan can be a powerful financial tool rather than a financial burden. If you found this video helpful, don't forget to like, share, and subscribe for more easy-to-understand finance guides, money-saving tips, investment insights, and personal finance education. Which loan topic would you like us to explain next? Let us know in the comments below. Thanks for watching, and we'll see you in the next video. Stay informed, stay financially smart.